the end of your fixed rate period and not sure what to do next? Today I'm joined by Lendi's Inside Sales Director, Sam Hyman, and today we'll be speaking about fixed rates in 2022 and how much more we can expect them to rise, breaking your fixed term and whether it's worth breaking it earlier than the term is meant to finish, and some additional tips to help you take control of your home loan and ensure you are on the best rate possible. So let's jump right in. Sam, could you please give us an overview of home loan interest rates over the past 12 months and what we could expect looking forward?
Yeah, sure. So interest rates have been trending down for over a decade. And this time last year, we had many 3 and 4 year fixed rates that were in the high 1%. And as a result, we actually saw a lot of customers taking advantage of those incredibly low fixed rates. If we fast forward to today, those same fixed rates are all starting with a 3 and actually trending towards 4%. With the return of more normal pricing conditions in the industry, we're seeing a lot more of lenders competing on variable pricing. And the key thing that will really determine what happens to that pricing over the next couple of months will really be what happens with the RBA cash rate. So I think the RBA Governor, Philip Lowe, has been quite clear in his language that borrowers should start to prepare for different rate rises and start to have a buffer if the cash rate does start to increase.
So just on that point there, Sam, you did mention that quite a few customers did decide to fix in a low rate in earlier 2020.
Yep.
So I guess now that rates are on the rise, what would your advice be to some of those customers who are rolling off the end of their fixed period or are on a variable rate? Would you say it's a good idea to fix their interest rate now?
Yeah, look, I think if you're rolling off a fixed rate, you'll revert to what's called the standard variable rate or the revert rate, and that rate will be dependent on the package and product that you settled. In a lot of circumstances, that rate that you're going to revert to won't actually be the rate that they're offering to new customers. So we know in this space it is something called the loyalty tax, and banks don't necessarily reward loyalty, which is why it's always a good idea every 6 to 12 months to engage with a broker or a home loan specialist and really just empower yourself with the knowledge and understand your options available and what different products are available at that time. So there are a number of different strategies that you can explore to look at the best rate possible. And even if you are on a fixed rate now and coming off, the fact that fixed rates have been trending up has meant that break costs have been coming down. So it may actually be a good opportunity for customers to break that fixed rate and re-lock in a rate if certainty is what they're after. Now, it's always about matching that to your goals and the customer's needs and objectives. So if a customer is after certainty and knowing what their repayments are going to be for the next few years, then a fixed rate today may be a very good option for them. And if not, there are obviously some pretty attractive variable rate offers available, which customers can take advantage of in today's market. However, these obviously come with the volatility and a bit of uncertainty around what the RBA is going to do with the cash rate and what will happen to variable rates over the next few years.
So I guess if you've got about, say, 6 months or less remaining on your fixed loan term, would you say now is a good time to reach out to a home loan specialist and see what your options are?
Yeah, exactly. So if there's about 6 months remaining, that's the time to start engaging with a broker or a home loan specialist and really start understanding the options that are available and the different products that may meet your needs and objectives. So I'm going to remind, I suppose, customers that if certainty is what they're looking for in a market where there will be quite a few fluctuations over the next few years and probably very likely increases to variable rates, another fixed rate could be a good option, even if it's a little bit above where the market is today, because it will give them that certainty in the repayments. And as I said, it can also be beneficial if those variable rates do obviously rise depending on the fixed period higher than what they end up fixing on today. There are also cashback offers that customers can take advantage of, which also can take away some of the transactional costs associated with the refinance. So I think it really comes down to engaging early with a broker or home loan specialist to really empower yourself with the knowledge so that you can then make the right decision that's right for you.
Yeah, thanks for that, Sam. And I guess we do just want to remind customers that this is an example and not financial advice. If you would like some advice, please reach out to a financial advisor or a home loan specialist. Here at Lendi, we have a team of dedicated home loan specialists who are happy to help you every step of the way. Feel free to book an appointment at lendi.com.au to see what your best options are. Thanks again for your time today, Sam, and we look forward to seeing you in our next video.
Great, thanks very much.